Right, hello everyone. Apologies for the little bit of a late start there. Just obviously trying to get a few things sorted out. Right, we will jump straight into it with our first question. Now, the first question I've had come in is how do you select stocks to invest in, and where do you find research to what makes those a good investment? That's a really good question, and it's one that a lot of people ask me when they're first getting started into investing. In my opinion, a good place to start is to set yourself up with a course and learn about the different types of investments there are out there, because you do not have to launch straight into picking a share. That can be really daunting and quite confusing, to be quite honest with you. The things that you need to look at as well is you need to actually ask yourself, what is it I'm trying to achieve from my investment? If you're the sort of person that wants to put money away on a regular basis and not have to worry about that stock selection, if you like, then a great place to start can really be a managed fund. The biggest thing you've got to make sure there is that you've got your risk profile right. And what I mean there is if you are, say, a balanced investor and you're comfortable having half of your money into the share market and half of your money into the fixed interest part of the market, which is a low risk area, then you need to research the managed funds that offer, say, a balanced investment. And also, you need to take into account what is important to you. Is it important to you for fees, or is it important to perhaps have that personal level of contact with an advisor, for example? Is it important to you that it's an ESG model? So, in other words, it's ethical, socially responsible, and have good governance, in which case these are things that you can also go through and eliminate. And you can use the sorted.org.nz tools to be able to go through and do that. If you're looking at doing your own share research, then hey, I'm happy to help, and that could lead on to a completely different topic. So definitely reach out to me if that is something that you would like to do, is to learn more about how to do individual stock selection. In the meantime, if you're thinking, I just want to get started, then I've actually put a link in the show notes to a very good investor beginner investing series that you're welcome to go through and complete. It's 5 parts to it, and you've got unlimited access, and you can keep coming back to it as often as you like. And obviously, I'm also here to be able to help you with that. So it's a very broad topic that I feel I can't really do justice to in sort of a few minutes that we're going live. Now, I'll just check the next question that came in as well. And that one is, other than gold, what other options do you have to invest in? So rather than the physical gold, what other options are there available to invest in gold? That too is a really good question. Yes, you've just mentioned you can invest into the bullion. You can also invest into mining stocks. So you can look specifically into mining stocks, mining companies, that sort of thing. You can also look to invest in an ETF, which is an exchange traded fund. There are many of these available, obviously, in different markets. So you've obviously got the New Zealand market, you've got Australia, you've got US, and I know there's a lot of uncertainty and things out there at the moment. Now I'm just going to, while I'm talking, pull that up. So there's a company called Smart Invest. And what I might do is I'll see if I can share my screen. Let's have a look. Right, I will share my screen here. So this is Smart. So these are Smart shares, and they have a really good range of ETFs. If I click on Funds and Performance, and I'm pretty sure it's under the thematic shares. So we'll click on that. And you can see here gold. GLD is the Smart Share ticker code, so GLD.NZ. Depending on which platform you're using, it may or may not bring it up with or without that .NZ. So you can click on here and you can see what the market price is, the return, the fund charges, and you can scroll down and find out a lot more about it. I really like the Smart Invest, so I will bring that. I really like the Smart Invest for the reason, there's a couple of reasons really. Obviously, an ETF gives you exposure to several different companies under that one topic, being gold, if you like. Yes, it does invest into an international ETF fund as well. However, by using it here in the New Zealand market, it means it's based in New Zealand dollars. So a thing that's been bandied around quite a bit lately is the FIF rules, which are the Foreign Investment Fund rules. So by using something like the Smart offering and gold, or any of their offering for that matter, it means that you are not being exposed to those FIF rules. Those international funds, foreign investment tax is actually being paid by the fund manager themselves. So it means you're not going to be subject to that at the end of your financial year. The other good thing about the Smart offering in gold is the fact it is a PI fund. So what that means is if you are on a tax bracket that's any higher than 28%, then your tax is full and final at 28%. So that can be a really good way to legally mitigate any tax obligations. So that's something that I do like. I'm very, very pro that. Now, I'm also going to go and have a look because of my next question that I have had is talking about, here it is, on piece of paper, what are my rules? So, whoopsie, these are my personal rules when it comes to creating stop losses. So we'll just go to Yahoo Finance. And I will share that screen as well. Okay, so this is just the top code for Yahoo Finance. Now, given we were talking about that gold investment, let's just pop that in, GLD.NZ. Here it is here. Right, now I'll just bring up the advanced chart on this. And that's brought it up on a 1 year basis. I'll also go to 5 year. Right, I'll just take off some of these. They're a little bit confusing. Right, what I've got on here is the ATR. Now to find that, if you just go to indicators and if you can just type in search and it's average true range, there it is there. Right, I've already got it on the screen, so I won't do it again. Now I use a 21 multiplier. So because this is on the 5 year chart, I want to times that ATR by 5 when I work it out. Sorry, start that again. I've got this on the 5 year chart, so I want to use a 21 multiplier. So it basically says over the last 21 weeks, what is the average range, if you like, that this share could potentially move. And it's going to move on average at about 21 cents per week. Obviously, there's going to be times that it's higher than that, times when it's less than that. What I then do is I take that 0.21 and I times it by 4. Now, another really good tool I can use is the trailing stop losses. Here we go. So it's called ATR trailing stops. So as you can see there, I've put in a 21 period. And in this example, I actually want to use that multiplier by 4. And I don't use the sell stops. You can't do that in a lot of cases in the New Zealand market. So we'll just blank that out. Sorry, the other way around. I don't use the buy stops. So we'll just pop in these sell stops and let's make it that color. So as you can see here, now I can't remember when I personally bought gold, but it is one that I do own, and this isn't a recommendation to buy it. You've got to do your own research. Now you can see by these little dashed lines, they indicate where my stop loss is, and it's based on this ATR times 4. Now for example, let's just say I entered it here on the 27th of October that week. Now my trailing stop would be at this level here, which is about $3.58. And you can see that the share has moved up and down along that way. All of a sudden here where I'm holding my cursor, which is the 19th of January, you can see that the share price bumped up. Now I still used that same multiplier based on the ATR, times it by 4. Because the share had increased and where the volatility was with the average true range, it meant that I can increase my stop loss. I then increased it again the following week, and the following week again. Now, as you can see, the share did increase. However, if I hold my cursor, you can also see that the ATR has increased as well. So one thing I never do is move my stop loss down. So if the share is increasing and the ATR, or that volatility, the average true range, is increasing, I keep my stop loss at the same point. So it's actually giving it a lot more room to move. You can see that there. There's a lot of gap between where that candle is on the 23rd of February versus where the stop is. So this is what I want to be able to do, is make sure that my trailing stop is giving the share enough room to move without it potentially taking it out of the market prematurely. Now I'll stop sharing that. The reason I like using this methodology is, for me, it takes all of the emotion out. I've already set my stop loss before I actually go into the market and place my buy trade. It means that I can be doing anything as well. I do not have to be sitting here in front of the computer watching what is actually happening with my share and share investment. It takes it out. Now, one thing I have noticed this week is that I have had a couple of shares, well, a little bit more than that actually, be knocked out, but certainly a couple of the ETFs. So there is a lot of volatility out there in the market at the moment. So that's something just to be mindful out of. And when I was actually working with a client yesterday, they brought up the fact that they're concerned that there could be insider trading happening, and this is why we're seeing the markets doing a lot of heavy sell-off. The markets are really quite nervous at the moment, to be brutally honest with you. Regarding insider trading, it does happen. It is highly illegal. I'm not saying, it doesn't happen or anything like that. It does happen. And every now and again, you do see someone featuring on the news that has been imprisoned for insider trading. Now, if you are going into something like an exchange traded fund, which has a whole group of shares put together, very unlikely that you're going to see that whole group be exposed to anything like insider trading. So, for example, if you're investing into the Standard & Poor's US 500 market, there's 500 companies that make up that indices. So very unlikely that you're going to see 500 companies be exposed to insider trading. Okay, so that's not, it is out there. However, I wouldn't allow that to be the predetermining factor as to whether you're going to invest into shares or not. There are certainly other methodologies that I'm more than happy to teach and show if that is of interest to you. So it does boil back, everything boils back to what your goals, what your objectives are with your investing and trading journey as to what is going to be appropriate for you. Now, I really hope that's helped. This has been a fantastic session to be able to bring. I'll just see if there's anything in the chat. And it doesn't look like there is anything. So I will leave it there. Now, if you are watching this on the replay and you do have any questions, just reach out to me. I'm happy to help. And hey, I could also do them on another video. So take care and have a wonderful Easter.